Hello and welcome to our Minds and Money 5 at 5 show. This week it's sponsored by RK Equity in association with the Resource Global Network. For those of you attending 5 at 5 for the first time, our aim is to maintain engagement between investors and miners through a lively, interactive format during the current situation. A few admin announcements before we start. To make it as interactive as possible, please have your video switched on. To ask a question, you have two options. You can either submit a question via the chat function, which is at the bottom of your screen, or you can also wave your hands via the invite participants function. I can unmute you and you can also ask your question live. This week's show has a Tesla theme and is hosted by Howard Klein of RK Equity. Howard founded the boutique capital markets advisory firm RK Equity in 2002. He has over 25 years of capital markets and investing experience across multiple investment themes and natural resources, including gold, iron ore, and lithium. From 1991 to 2001, Howard led the institutional equity sales desk of SG Cohen Securities, founded on the EMA region as well as in Japan. Over to you, Howard.
Hi, everyone. If you could just put the slides up, Elaine. Thanks all for coming. We're just going to start with a few of RK Equity's takeaways from Battery Day and then introduce all these four stories. And I'll say, just keeping in persona, that I'm Nirvana. I'm so happy because today I found my friends. So we have three hard rock lithium stories here and one hard rock nickel story in the Western Hemisphere. So if you can go to the first slide, please. This is RK Equity's Tesla demand forecast based on the 3 terawatt hours that they planned by 2030. Prior to Battery Day, we were forecasting 3 terawatt hours for the entire industry by 2030, with 500 for Tesla, and that's Tesla alone. So bottom line of Battery Day is enormous demand for lithium and for nickel. But this is a lithium chart specifically, which also includes, the production and recycling. But next slide. So Tesla's in-house forecast means a minimum of 5.5 terawatt hours by 2030. Our base case scenario for lithium, including recycling, is that Tesla could only handle 30 to 35% of their own needs. So they're going to need to buy lithium from existing and new suppliers for some time to come, in addition to what they do internally. High nickel cathode demand dominates Tesla, until they introduce a $25,000 car and mass energy storage takes off. We have been very bullish, more bullish hydroxide, and sooner. We see a major shortage by 2022 if Tesla Berlin and Austin achieve steady state production for the semi-truck and Cybertruck. Just from this slide, I think we're going to speak a little bit about this sulfate-free, lithium processing. One of the panelists here on Critical Elements is using such a process. And we're going to talk obviously about Piedmont Lithium and their new contract. And for nickel, the reduced flow sheet steps. There wasn't a lot of talk post Battery Day about, after his Q2 talked about mine more nickel. He didn't speak, he didn't have a contract for any nickel companies, but he did talk about reducing, steps in the nickel processing, which we'll talk about here. We're the beneficiaries of Battery Day are on this panel in our view. High grade nickel sulfide deposits in the U.S. and Canada, and spodumene producers in the U.S., Canada, Brazil, and Australia for battery quality hydroxide producers. This is just a picture. We need to add the Austin Gigafactory, but this just demonstrates, where the center of gravity for a lot of the battery and EV supply chain is in the United States. Again, given geographic proximity, you can see the vast majority is kind of in the eastern and southeastern United States, except for, largely, Tesla and Lucid, on the West Coast. And that's it for these slides. I think we're going to start first. We have one nickel company and 3 lithium companies. So we're going to start first with the nickel company, which is Sean Werger at Talon Metals, which is the Tamarack project in Minnesota. Talon's listed on the Toronto Stock Exchange. So Sean, why don't you go ahead? I think you have a couple of slides, and then just introduce a little bit the story for 2 minutes.
I do. Thank you, Howard. Really appreciate it. So as Howard mentioned, our project, we are the Tamarack project. We are located in Minnesota in the US. The Tamarack project, just a bit of background, it's a high-grade nickel sulfide project. Our partner on the project is Rio Tinto. We are currently, our group Talon Metals, we are currently the manager operator of the project, became the operator in October 2019. So it's a pretty new story in terms of us having control of the project. And as operator manager, we basically control the project's destiny in terms of exploration approach and overall strategy. In terms of what you're looking at here on the slides, so if you look to the far right, what you see is a huge 18-kilometer intrusive complex that is Tamarack. And just to the left of it, just by way of illustration only, I'm showing you one of the most prolific nickel producers in the world today, Talon, based in Russia. And as you can see at Talon, very similar in terms of scale, with several mines along the intrusion. At the Tamarack project, to date, we have defined a resource, but that resource, as you can see, again, looking at the right, only covers about a sliver of the 18 kilometers. What's really exciting about the project in terms of future scale potential is that we've drilled, in some cases, 3 kilometers to the north of our resource, and we've hit high-grade nickel copper mineralization. And similarly, we've gone more than 1 kilometer to the south, and we've also hit high-grade mineralization. So there's quite a bit of evidence that there's additional mineralization along the 18 kilometers. On the far left, you can just see a quick summary of our existing resource. We currently have about 3.6 million tons in the indicated category at a grade of 2.45% nickel equivalent. And then in the inferred category, approximately an additional 4.4 million tons at just over 2.1% nickel equivalent. Just to help calibrate that for everyone in terms of what that means, if you look at the average global nickel grade for underground mines, it's currently just above 1%. So this truly is a really high grade project. In terms of what that means, high grade, simple recoveries like Tamarack, it essentially means you're looking at a project that's going to be at the lower end of the cost curve, a project that can work in virtually any nickel environment, including at current prices. A couple of things I just want to mention about the uniqueness of the project. First of all, very notable that the project is in the United States. Currently within the US, there is only one existing operating nickel mine. It's called the Eagle Mine in Michigan. It's owned by the Lundin Group, and it is expected to be fully mined out by 2025. After Eagle, in terms of what's left in the United States, there's Tamarack. As far as we're aware at the moment, we would be the only one. So that, from a strategic standpoint, makes us very relevant, especially to the discussion of a domestic supply chain within the United States for the EV sector. One other thing I'll mention that's unique about us, because we're high grade, because we'll be a low cost producer, while I recognize that we're obviously talking about Tesla tonight and some of the impacts from Battery Day, the reality is we are not dependent upon the EV market to be successful. We believe that there will be a tug of war between the EV manufacturers, the stainless steel manufacturers, and even the battery manufacturers for the product that will be ultimately produced from Tamarack. If you could just flip to the next slide, please. So just a brief comment on this slide. So this is actually a slide that we've been showing in our presentations and on our website. We've been showing it for more than a year now. And it's quite relevant it sort of echoes precisely what Elon Musk was saying during Battery Day. So what you're looking at is at the top, you're looking at the current nickel supply chain for batteries. And you've probably heard a lot of talk that the current supply chain is very inefficient. Well, what do we mean by that? Well, first of all, the supply chain really was built for the stainless steel market and not for batteries. And so we believe there's a number of steps that can be cut out along the way. And again, that's something that Elon Musk had mentioned as well. The other thing to note about the traditional is every step along the way, whether it's control to refine cost, plus there's a as for the process, and it also all results in a much larger environmental footprint. So at Talon and at Tamarack, what we're striving, again, this has been our strategy for quite a while now, is if we're going to go the EV route, we believe we can cut out a number of those steps and essentially go from a concentrate to what we're calling a nickel battery product, whether that be a sulfate or a precursor or something else. And again, I'm sure we'll be talking about that a lot more during the discussion today. Thank you.
Thanks very much, Sean. That last slide where you cut out those 3 steps seems very interesting, because the supply chain, as I've started studying, lithium is nickel is very complex, and as Elon, talked about, how far nickel needs to kind of travel. If they come up with some kind of solution to eliminate a number of the steps, that clearly will be less cost and more sustainable. So yeah, we could talk a bit about that maybe in the Q&A. So next up is Keith Phillips at Piedmont Lithium. I guess, big news this week on Tesla. I've been involved with Keith and Piedmont Lithium, almost since inception. So what identified, 4 years ago as a strategic resource that we thought, the whole market and all the OEMs would be attracted to, the validation has been very exciting this week. So I just wanted to kind of leave that as an intro and let Keith talk about, I guess this is your first public comments since the announcement. What does this all mean?
Well, it's very exciting for us. So as Howard indicated, we've been advancing the Piedmont Lithium project in North Carolina for about 4 years. And we've proven up a large high-grade mineral resource. We've demonstrated very compelling economics through a scoping study and a pre-feasibility study. We've developed a plan essentially to produce spodumene concentrate from our own mining operation, but also to convert that into lithium hydroxide for the battery business in the region. For those that don't know, North Carolina is considered the cradle of the lithium industry. Virtually all the world's lithium came from North Carolina from the 1950s to the 1980s. Albemarle has their headquarters there and their Kings Mountain operations there. Livent has their biggest chemical plant at Bessemer City, just down the road from us. There's a great depth of talent there. The infrastructure is all first rate, as you'd expect. We're 30 miles west of Charlotte in North Carolina with low-cost power, low-cost labor, no state mining royalties, et cetera. It's a wonderful place. So we've been advancing this plan. The one thing we've been lacking is any really real, other than from our strong shareholders, we've been lacking any real third-party validation in the form of an offtake agreement. And it's something we've been seeking for some time. We've had extensive dialogues with auto companies, battery companies, cathode companies, trading companies, and very productive dialogue. I'd say it's obviously been a buyer's market for lithium for the last 2 years. There hasn't been a lot of pressure on participants to lock up supply. So the Tesla conversations had started as lithium hydroxide conversations more than 2 years ago. That's been ongoing. We had a conversation with them several weeks back where they introduced this concept that they might buy spodumene concentrate from us. We hadn't planned on selling any spodumene concentrate to third parties, but the concentrate buyer universe heretofore was a smaller group of Chinese groups. Having Tesla be in our home country just down the road from us is a change agent for us. So we decided to have that conversation. We were very happy to be selected. And so for us, it's sort of an initial offtake agreement for concentrate. We're not seeking any other concentrate offtake agreements. We don't intend to sell any more concentrate. We intend to use the rest of our material and hopefully some third-party material to build a big lithium hydroxide business in North Carolina. I would say Tesla is aware of those plans and is supportive of them. And I think the news for people in the industry and for observers of the industry is, as Howard's slides indicated, Tesla sees massive growth in electric vehicle penetration, massive demand for themselves for lithium, and they believe for others. I think it's fair to say they're concerned about the lack of investment going on in the last several quarters in terms of upstream capacity. As far as I'm aware, there's not a single upstream operation being built anywhere in the world today from a raw material perspective of lithium. That's a problem when your sales are growing 30, 40% a year and you're building big plants in places like Shanghai and Berlin and Austin. So they're very interested in, I think, incentivizing new production. And they're, in our conversations, they took a really fair-minded approach to that. They recognize that the prevailing price environment is not incentivizing any new production. So we'd have to find a kind of a pricing mechanism or pricing level that would work for both parties. We were able to do that. We're both, I think, very pleased with it. And we'll be moving forward. But so it's great news for Piedmont. I think it's, as Howard said, it's great news for spodumene producers. Clearly, spodumene to hydroxide is a mantra we've been spouting. I think it's clear that's certainly the easiest to ramp. It's what people want. I think if you're a spodumene producer or plan to be a producer in anywhere in the world, certainly places like Brazil and Quebec and Western Australia and North Carolina, I think the future is very, very bright. And I think you're going to have a feeding frenzy in the 2021, 2022 timeframe as more companies come to the realization Tesla has, which is that lithium is going to be in short supply. And whoever doesn't lock theirs up isn't going to get any, and it's going to have a really difficult time meeting their needs for their EV plans. So, Howard, I don't know if you wanted me to say anything more than that, or if that's the proper introduction for now.
I think that's a great introduction, and I'll just take a couple of things that you said and use that as a lead in to Anna. So in terms of shortage, I just an hour ago received a Morgan Stanley China analyst for lithium, whose voice is not heard as much as another voice of Morgan Stanley's, but I think that's the voice you should be listening to, Rachel Zhang, the China analyst. China is much closer to what's going to happen and where the turn is, and she sees inventories depleting rapidly, since June, July, August. Surprisingly, actually, this note talks more about carbonate and LFP, turning. But also hydroxide, so the prices we know are unsustainable, but she's getting more and more optimistic and upgraded her target price on Ganfeng, which she covers as a result of that just now. So I'm going to introduce Anna at Sigma. So I found it unbelievably impressive that in the depths, the worst spodumene prices, that occurred, Sigma managed to get project financing of $45 million done with a syndicate of banks led by SG, 6-year term, I think, 5%, or and declining, interest rates. So substantially lower than the interest rate, in project finance debt that was available for Nemaska and others over the years, despite, the market environment for a Brazilian asset. So there was a bit of a Brazil risk, low prices. They obviously have a strong partner in Mitsui, which I'd love for you to talk about, Anna, which seems very much destined for Japan. But today, there's no conversion capacity anywhere other than in China. So if you can kind of have us understand, it's clearly you're a spodumene project going to hydroxide with Mitsui as partner. But I guess what is, tell us, give us an update on Sigma and what you think that the Tesla news with alternative conversion in North America means for Sigma too. I think you're on mute, Anna. Anna, you're on mute.
Yes, the host, you need to, okay.
Okay.
Host is keeping me mute.
We can hear you now.
Okay. Yes? Oh, good. Great. So if your host could enable one slide, I can share it, but if not, I can talk through it. Essentially, Sigma is a Toronto-based Canadian company. Eric here had, I had the honor of working with Eric on our IPO in the TSX. Our main asset it's a sizable asset in Brazil. It's one of the largest spodumene pegmatite fields in the world. Like mining in Australia, mining in Brazil is in the superlatives. Brazil is the country of Carajás, and that says it all. We got 52 million tons of measured indicated 43101 resource. That's drilled to mine. That's 1.9 million tons LCE measured, indicated. Then we got 13 million tons of proven and probable reserve in the bankable feasibility study that was funded by SocGen and Mitsui. So it's massive. The production now essentially is geared for 21, 22. To Keith's point, that's exactly what's happening. I mean, it's a tier 1 asset with high purity. So first phase production, which is 220,000 tons, 33,000 tons LCE, it's sold out. So we're going into second phase production and scaling up to accelerate it, doubling the reserve. And that would bring us to 440,000 tons, 65,000 tons LCE, of which we already negotiated half for 2023. So massive scale. In perspective for the Australians here, phase 1 is a third of Greenbushes mine, both sides of it, and phase 2 is 2/3 of Greenbushes mine. So it's significant scale. So scale. Then low cost. Because of the very high grades, the diluted reserve grade is 1.5%. That's reserve. We were able to achieve extremely low costs anywhere in the world we would deliver. So CIF China cash costs on the bankable feasibility are $280 a ton. I am very enthusiastic about the possibilities Piedmont opened with the Americas supply, because Houston or Texas ports, it will be $220 a ton, our cash cost. So, you know, very competitive cash cost. So low cost. So scale, low cost, purity, which goes back to your point about scarcity of hydroxide, Howard. Because of these very high grades, essentially, we end up with a very high level of purity, and that's translated into low levels of the classic impurities that preclude the pre-chemical to become tier 1 hydroxide. So low iron oxide, low potassium and sodium, which are the alkalines. Essentially, the product pre-qualifies the hydroxide into tier 1. And that is the secret sauce in the juice between the partnership with Mitsui. Our clients are final clients. They're cathode makers in Korea, South Korea, and Japan. So all of it is achieved through that partnership, where we essentially convert in China through tolling arrangements. The product never leaves our balance sheet. Same business model as the owners of Greenbushes, Chanqi and Albemarle. And then the hydroxide certified, already being certified into the clients, Mitsui's clients in Korea and Japan. So high scale, low cost, high purity, and then green. That's what we love about it. That's how I got involved. I run an impact fund. 6 years ago, we set out to create an example of sustainable mining in Brazil, because it was right after the first disaster of a slime tailing dam. And the idea was to make it different, to just do it different, reinvent, and prove that mining could be sustainable, economically sustainable, successfully sustainable. So we started off with what 6 years ago gave me the nickname of this environmentalist mining person. Now it's quite fashionable, but back then it was not. So we started with water recirculation. 100% of water is recirculated, 90% recirculates, 10% evaporates. So efficiency in use of water, dry stackings for the tailings, 100% of the energy is green. So that put us in a whole new category, because together with the environmental compensation practices we adopted of Atlantic forest, even though we are in the desert, created carbon credits that are internally offset. So we're able to deliver carbon neutral product already. So that's something we are very proud of, because it was done when no one was really paying attention. So these 4 attributes have really helped us. The first 3, because those are the core business attributes. The 4th created a competitive advantage when we secured financing for this project, ultimately because we were able to navigate the ESG green financing universe quite successfully, because our scope 1 and scope 2 had such high ESG rankings, right? So that explains the SocGen achievement, where we secured LIBOR +5, as you said, 6 years, 2-year grace period, at a time when our peers were 1,000 basis points higher, or 700 basis points for our next Australian peer in terms of total cost of debt.
That's great, Anna. I have some more questions to follow up, but let's go to Eric first on critical elements. So Eric Zaunscherb just joined, I guess, the board over the summer, and then as chairman of Critical Elements, which has been a bit of a under the radar company of all the universe of conferences and otherwise that we all go to. You rarely see Critical Elements. And Quebec obviously has had some challenges overall as a jurisdiction over the years, but nevertheless, they do have a history of spodumene, production, and there's lots of deposits there. And we've been talking, there's North Carolina, there's Quebec, there's Ontario, there's a Carolina to Quebec or Carolina to Canada. Spodumene's pretty close to the Terra factory as well, Critical Elements does have some ex-Albemarle Rockwood, people in its midst. Very credible actually on Piedmont's side. Processing engineer David Buckley has been in common with both companies. But if you could also address, Eric, Elon Musk talked about a sulfate-free process for hydroxide, so different from what's kind of currently being done. Critical Elements is also using a sulfate-free process. So if you could address that in your comments, that would be great.
Indeed, yeah. Forgive me if I'm not quite as polished as my colleagues. As you said, Howard, I just got into the seat as chairman a couple of weeks ago. I have to admit I'm somewhat starstruck, given the fantastic job that my co-panelists have done here. Sean, the tenacity to keep peeling the onion at the Tamarack deposit, which I have visited. It's got fantastic exploration potential going forward. Keith, in keeping on moving forward and now landing that transaction, the offtake agreement with Tesla is a great move at this point in time. And then finally, but not least, certainly Anna, in the financial engineering that you alluded to, but I think also the important ESG positioning of Sigma, I think is an extremely important thing, not just in terms of the investors today, but also in terms of the life cycle assessments, the scoping work that's being done by the end user, and the environmental footprint that needs to be addressed for all the supplies. So focusing on critical elements, you're right, it has been a quiet story. I like what you wrote in one of your pieces, Howard, about the importance of, or the preference to be the tortoise and not the hare. And I think that's been a key issue in Quebec, in that we've seen at least 2 situations where people raced towards the finish line and stumbled on the way. Our preference is to move forward much more slowly, conservatively, and get the job done. So the key elements here where critical elements are concerned is we have the Rose deposit in northern Quebec with excellent infrastructure, a road and a power line go right past the deposit. We aspire to be a large responsible provider, Quebec-based. Quebec has got a tremendously supportive mining industry and government, not to mention 4.5 cents a kilowatt hour when you're using power in that low carbon grid. The deposit purity is highly, highly desirable. Great yields, both in terms of the concentrate and in terms of the lithium hydroxide conversion. You mentioned the metallurgy there, the lithium hydroxide conversion. It is indeed, we had pilot plant work being done by Outotec, the world famous processor, And in that pilot program, we had some spectacular results. And it is a non-sulfate process. You're looking at basically, you're looking at a sulfate-free process. It's similar to what Tesla's proposing. We don't have the exact details of what process they are using, but it uses soda leach of the calcined spodumene, followed by conversion using lime, solution purification using ion exchange, and then lithium hydroxide crystallization. So that's very, very positive. We're getting a recovery rate of 93% at that level. So that's very, very positive. I mentioned the conservative approach. We want to see the phase 1 of delivering a mine and a spodumene concentrator first, followed by phase 2, the lithium hydroxide conversion. The exploration potential is enormous. Here we're talking about one of the largest land positions globally for spodumene exploration. The Rose project itself is 247 square kilometers, and there's an additional 284 square kilometers in the other projects in the district. You also mentioned the team. We have a spectacular team. Jean-Sébastien Lavalier is the CEO. He has over 26 years of experience in mining exploration. President is Dr. Stefan Haber. Stefan is the former CEO of Rockwood Lithium, which was sold to Albemarle for $6.2 billion US in January 2015. He's brought his CFO, former CFO of Rockwood, Marcus Brune, who is our VP Finance. He's obviously got a lot of experience on that side. Paul Bonneville is a project manager, over 30 years of experience in mining operations in Canada. And Jacqueline Leroux, who is the environmental manager, is moving that forward. So we've got a number of important catalysts coming up. We intend to have, or we hope to have, our full permitting by the first quarter of 2021. And that will allow us to tick off one very important milestone. We will see the completion of phase 1 detailed engineering with Primero Group. Primero Group is working under an EPC, another part of that conservative approach. And then that would be followed by the financial package, which would include strategic partnerships. And we've been very clear that we are interested in offtake, traditional equity, debt, and putting all of that together. So that's very exciting for us. We have a lot of good catalysts, a lot of good news flow, and we think it's a very good story and such an important part of the spodumene, hard rock spodumene thesis going into the conversion of lithium hydroxide that Tesla has been touting and has brought to the forefront with the recent Battery Day.
That's great. Thank you, Eric. I have a lot of various questions, but one thing that hasn't yet been addressed that I want to address that I think is important, and that's the overall kind of capital markets. And I'm going to have Keith kind of lead this, but I was an advisor to what was Western Lithium and now is Lithium Americas for a long time. And I urged them as a US story initially to list in the United States all through the time of Western Lithium. And then after Lithium Americas, took it over, and Lithium Americas, came back to me and told me that was probably the best advice that they, gave me, because the liquidity in the share on the New York Stock Exchange is, has been phenomenal. Right? Like the volume has migrated very significantly over to, the U.S. is surpassing, Canada by a long shot. That advice I gave to Lithium Americas came through my long-term friendship with Keith, right, who had told me this for 10 years. So when he joined Piedmont, right, it was very much, his focus to get listed in the United States. So just, you're seeing it in the liquidity in the shares. There's only 5 lithium focused shares at Piedmont Lithium Americas, and then Livent, Albemarle, and SQM. But I think as there's been a lot of special purpose acquisition companies with Tesla, and now the EV thematic is very strong in the United States in terms of getting projects financed. I guess, Keith, if you could just talk about your experience as a dual listed company in Australia, how you view this question and whether it's a model for maybe others to follow.
Thanks, Howard. Yeah, that's a question I wasn't anticipating, but I've spent a lot of time thinking about it. So, so I was an investment banker for 30 years. I spent most of the last 2 decades working with Canadian junior miners, gold companies, silver companies, uranium, et cetera, bringing them into the U.S. capital market. And I think it's a major commitment to. It's easier for Canadians, frankly, than anyone else, given multi-jurisdictional disclosure system. But for others, it's a major commitment to go through the SEC process. It's not inexpensive. It takes a lot of time. Ultimately, it takes a lot of investor relations effort to have success, and ultimately to drive any liquidity, you need to actually raise capital in the U.S., which we finally did for the first time this June. And until then, our liquidity was modest, but it wasn't zero, and everyone who we met in the U.S. could have the opportunity to buy stock. When we did our first equity offering in the U.S. in June, and we had done 3 deals in Australia in the last 3 years, our liquidity went from sort of 60-40 Australia to 85-15 US. Yesterday, honestly, on special news with Tesla, shockingly, we traded $2 billion worth of stock on a $200 or $300 million market cap company. And today we traded another, I think, 175 million.
Wow.
No, more than that. No, it's I forget how much we traded. A lot. Yeah. So it's just a massive capital market. My basic there, as Eric would know, at least as well as me, given his background, there have been some really wonderful successes in the Canadian mining industry who didn't list in the U.S. Companies like Osisko Mining, Redback, there are a bunch of them, but the majority of quality emerging Canadian companies ultimately list in the U.S. Many do, and in every case I'm aware of, they've found dramatically more trading liquidity in the U.S. And I think of trading liquidity as a demand versus supply issue. If you create more demand for your shares, by definition, the price should go up over time, and I think that generally happens. Again, it's a big investment. It's not for everybody. It certainly is for us. I mean, we have an American project. We're an American team. We wanted to Americanize the story. I would say our strongest institutional shareholders are still in Australia, and we have very good relationships with them, and we spend a lot of time with them. But we're growing that base in the U.S.
I think you raise a very important point, and that is you've got an American team and an American asset. And when you have that American home advantage and being listed in the United States, that is such an important point. I'm not so sure having an asset in Mongolia would trade multiples in the United States over a multiple in Australia or Canada.
Yeah, it can all depend. Anyway, it's worked for us, Howard.
Okay, well, that's great.
Just a quick question for me. Because with Tamarack, we're obviously in the U.S. and it's a discussion we have often as well about listing in the U.S. But as you know, Keith, there's certain thresholds in terms of market cap. When you guys did the dual listing, do you recall what your market cap was at the time?
Boy, it would have been $50-60 million. There are a shocking number of American companies with market caps smaller than yours listed on NASDAQ. So a lot of those restrictions people assume are true aren't actually true. There are hundreds and hundreds of micro cap, nano cap, biotech companies, et cetera. So I'd be happy to talk to you offline about that. It's something I spend an awful lot of time thinking about, and I can put you in touch with people who would give you good advice. It's not for the faint of heart, but for guys like you, it could be very much worth it. And Lucas Lundin, who I used to spend time with, he's sort of anti-U.S. listing because he's not a fan of the SEC in the process. But in terms of driving liquidity, it's something to consider.
Interesting. Thank you.
Another question, I guess, along on the finance side or so. I know lithium more than I know anything else, but pre-battery day, we're talking about $30 billion worth of investment needs to kind of come to the space. And what you're seeing is Albemarle and the likes, curtailing, their investments because prices are low. So my reason for the question on the capital markets is, like, the U.S. is a big capital market. You have valuations of, this QuantumScape as an example, a solid state, battery company that it raised, as a $3.3 billion valuation for something that may or may not have, EBITDA by 2027, right? That was the forecast. So there's a disconnect between, enthusiasm for that and enthusiasm for mining. But in the U.S., I think there's a lot of scope to raise this $30 billion of capital in the U.S. But another means is potentially M&A. I mean, you guys are all like junior companies, and you're all going to kind of advance projects and want to be producers. But do you see bigger companies, not necessarily the existing producers, but outside entrants potentially coming into the space to assist and meet? There's an element of Elon Musk kind of doing cathodes, doing mining because no one's moving fast, at his speed. What do you think about that? I guess anybody, maybe Anna, you could answer first, and then maybe Sean and Eric and Keith.
Well, for the Australians in the audience, the biggest M&A story in lithium is happening right in your backyard, right? Is the battle for control or for the co-control of Greenbushes, which is the crown jewel of all hard rock assets worldwide. And it's going to play out in a number of different ways. What we know is that every major mining player that is not currently in the battery material space or is partially in the battery material space has engaged in quite a lot of homework. And at the end, the process now going to the second stage with two finalists. One more Western-like, in terms of its proposal and what's on the table for Chanchi, and the other one most likely is a consortium where you would mean Chanchi to go and become more of a Chinese SOE, and these are fine choices either way. So what's going to come out of that process, it's a multiple that hopefully will drive sort of the new benchmark for the industry, for the hard rock lithium miners such as ourselves. I mean, following on the footsteps of Piedmont, Wodgina, and then, Greenbushes, which is in a whole new category. I mean, it's a high purity, large scale, low cost. It's got all the right attributes that Piedmont and Wodgina failed to produce. Both are very high cost projects, and they are deemed to be unfeasible by their owners in the current pricing environment. So, this process will come to an end in November, we hear, and it's a bit, it's watch that space. I mean, that will, and I'm a very big fan of M&A because multiples don't lie. They're quantitative measure of attractiveness for an industry, for an asset. So it will be quite an interesting benchmark to observe.
What do you think, Sean? We've done a little bit of work together on M&A multiples, because there's a thought like mine life in Australia. They really care about mine life, but there have been some examples in the nickel space where very short mine life assets got very significant multiples. So if you could address that in addition to any other kind of consolidation thoughts with you as with Rio as a partner, and the like.
Yeah. So I mean, I guess the first comment is if you're looking at comparable sort of M&A transaction, something that would be similar to Tamarack, so you're talking high-grade nickel sulfides, there's really two to look at. There's, again, when, Rio Tinto sold Eagle to Lundin, that was the project I mentioned in Michigan. And then there are Sirius Resources that sold Nova Bollinger to Independence Group in Australia, and that was for over $1 billion US. And at that point, that project had, a total of only 14 million tons. It was high grade, and it had a mine life. I don't remember exactly, but mine life was, call it, in and around the 10-year time frame. And for Eagle, it was below 10 years as well. So mine life, doesn't seem to matter so much in the M&A when it comes to your high grade nickel sulfide deposits, because again, grade is king, and that's your low cost. One other comment I'll just make about M&A more generally, because you mentioned Rio Tinto as our partner as well. Obviously I think of M&A separate and apart from strategics coming in. So apart from the battery manufacturers or the OEMs or those type of groups, I think of it more as the traditional mining companies. And from our perspective, as I said, we only took over operatorship of the project in October 2019. And as I tell people, almost immediately we were kind of surrounded by various groups that wanted to have discussions. But as you could see from my initial slides, there's a lot of potential there, and some work that we want to do aggressively first before, we would have any of those discussions. And then, I always say, don't count out Rio Tinto. I mean, they've maintained a meaningful minority interest in the project, 40%. And while they have no special first rights to purchase back the 60%, as the project gets scale on an accelerated basis, you never know what they're going to do.
Do you have any insights, Sean, by the way, on what they're doing in lithium in California or in Yadar in Serbia that you could share?
I don't.
Okay, Eric, do you want to address that question just on kind of M&A and
yeah,
and
and
also
maybe
just not just from a multiple perspective, but just from a large amount of juniors in the space that are all kind of trying to get projects into production versus, maybe some consolidation within, Quebec and Carolina and just, or somehow developing, some coordinated, effort.
yeah. Looking at the M&A side first, you mentioned Rio Tinto and their project in California, Yadarite, the Yadar project in Serbia. Rio Tinto and other large companies either go big or go home. And we certainly aren't seeing signs of Rio Tinto walking away. In fact, we're seeing Rio Tinto amp up its exposure to lithium. And so that's got to be a natural as a potential traditional senior coming into that space. Another area that's important from an M&A perspective or a new entrant perspective, and we've already seen it, is Wesfarmers, for example, coming into Australia. Wesfarmers is not exactly our first pick for a natural buyer in the space, and yet they came into the space big time. So we're going to hear more about that in their joint venture. Next, you've got the petroleum companies. Look back to Lithium Americas, and one of the key catalysts, if you will, financially was the entrance of Bangchak Petroleum out of Thailand. Who expected that? Well, whose bingo card was that one on? And so when you look at the oil and gas companies, the big integrateds out there, and all the renewable energy initiatives that they're doing, the recharge station joint ventures that they're getting into, it wouldn't be surprising to see more big oil and gas companies come into this space. So rather than us moaning about, the lack of funding in this space, Tesla's doing us a favor. Tesla's getting this ball rolling with Tesla investing in lithium carbonate, hydroxide conversion in Texas. Tesla talking about getting into the mining business, and I firmly believe that, just like everybody else, that it's not real, that it's more of a negotiating position. With regard to consolidation amongst the juniors, sure, that happens in some of these cycles, but it hasn't been happening as much in these cycles. After all, if I've got a project that needs financing and there's another project out there that needs financing, what's the advantage to putting the two together? Now, putting producers together, that makes sense, but on an exploration and development side, not so much. That's my view anyway.
Well, you're right. When Western Lithium merged with Lithium Americas originally, I remember some people said, "Congratulations, now you have two unfunded projects."
Yeah, right. So they dealt with one first, and now they're working on the second.
Right. Okay. There's a couple of questions here from the gallery on what does this all mean for Australia? You mentioned Wesfarmers. They tabled that for a year. We'll see Q1 whether or not they go through with that. But the whole concept of Western Australia and Lithium Valley, downstream hydroxide, one of my takeaways is that being close to mine mouth for hydroxide, especially given that it has a 9 to 10 month, shelf life, Elon Musk is basically saying, no, it needs to be closer to the cathode of the battery, and the EV. So what does Battery Day mean? None of you are Australian projects, but what's your view, on that? Maybe you could start, Keith. You have a lot of experience with the Australian market and comparables there.
Yeah, so we're an Australian company, and I've been to a number of those spodumene projects. I think first of all, bottom line, I think everyone in lithium is a winner. Tesla, I can tell you, has an all of the above strategy in lithium. They're hoping we're all successful. They'll need a lot of lithium. So I think That's true for brine projects. It's true for any other new technologies and any other people looking at new things, whether it's direct lithium extraction or clay projects or other things. It's certainly very obviously good for spodumene, most of which is in Western Australia. So I think it's great for those guys. I think, as Anna indicated, just as Sigma can, they're a low-cost producer, but or will be, but just as they can ship economically to different parts of the world, some of the Australians will be as well. So I think the question ultimately will be, are you better off taking all this wonderful Australian spodumene and converting it in the Perth area, or is it more economic to ship it to somewhere closer to customers, somewhere where with a bigger maybe industrial base, less of a natural resource base, lower power costs, et cetera? And I think you'll see some of each. Obviously, Albemarle's building capacity there. Tianqi's been building capacity there. I presume the Wesfarmers covalent project will advance on some basis. I don't know what will happen with all the other spodumene capacity in Australia and how much of it will be converted there versus shipped. I wouldn't be at all surprised.
Asking for a friend, but how great is that Australian spodumene? Aren't they having a hard time actually upgrading that and getting really high quality lithium hydroxide out of it?
Well, that's the former analyst in you, Eric, and you might be willing to comment on that more than I am. But, so listen, there's a lot of spodumene in Australia. A lot of it's being converted into lithium chemicals currently. I'm sure more of it will be in the future. So I think those guys will have. I think it could be a boom and bust environment for spodumene producers, but we've been in effectively a bust. I think there's a very strong cycle coming for spodumene. And Howard, to answer your question, I don't have an answer on. All I'll say is I think North Carolina is a particularly attractive place to build a lithium chemical plant. I'm not sure about Western Australia, but I haven't done a lot of work on it. But I think there's some attributes we have that I don't think they have. But I'll leave it to others to comment.
Okay, I'm going to make one comment, and I'll talk to Anna about the qualification and the quality of product. It's really important. But as I understand, Eric, without saying anything, on any of the companies that I don't know intimately about, but I think water is an underestimated issue, and that there are, I understand, like in Western Australia, high saline water, versus very clean water, which I've come to understand is in kind of North Carolina and likely in Quebec as well, matters, to impurities. But why don't you talk about the quality issue, Anna, and the qualification? Because you indicated that, you're going, your customers are all in Japan, you're tolling in China. We hear all the time about qualification. Is Sigma material already qualified, through that process with the Japanese customers?
Yeah, sorry, I'm just sorry to interrupt. We just need to unmute Anna.
Got it? Yes. So, and I think that's a very good point. I mean, Australians, although most projects in Australia, except for Greenbushes, are high cost as per, if you apply their standards, if they were to ship to Houston, they would lose, right? Because they wouldn't be able to bear the $70, extra shipping costs versus the current $18 to $20 to Shanghai. So I think that's one point. However, and that's to Australia's advantage, until 23, 24, when meaningful hydroxide capacity is actually up and running, ramped up, and qualified in the West, either US or Europe, today, 100% of tier 1 lithium hydroxide is processed in China. I mean, it's the reality. The majors do it. The two American companies, which are the majors, do it. The cathode industry does it. So this is sort of where we focused on. In other words, let's just keep it low risk and do exactly what the majors are doing. The two barriers to entry to replicate the business model of the majors were a high purity product. The majors had Tianqi's, Albemarle's had Greenbushes, which is high purity. We have our high purity product. So you certify the pre-chemical. And the pre-chemical is engineered to spec to that line. And then to find the certified chemical converter, we just went to the same converters that have been certified by the majors. So once you put in high purity product into those chemical lines, the certification process, we've been at it for 2 years now since we started our pilot plant, became pretty straightforward. So we certified with the tier 1 suppliers in Japan and South Korea, in great part because, to Eric's point, we took a very conservative approach. We're a private equity investor. Company's basically private. Our partner's Japanese, so more conservative than that, it's almost impossible. So we took a very conservative approach to that certification process, like baby steps. And then once we did it, then we're now scaling up because we got that route. But to your point, Howard, it wasn't easy, but it was achievable because the barrier to entry was the high purity pre-chemical certified, which essentially on its own is a facilitator, enabler of the high purity tier 1 lithium hydroxide coming out on the other side at the cost, because the key thing is anyone can purify anything. The costs skyrocket. So the key thing is to do it at the cost, to basically deliver the spec sheet of the lithium hydroxide with the low levels of potassium, low levels of sodium, low levels of iron oxide, and all the other 14 metals that you control for the standards of the tier 1 cathode players that feed the large global OEMs today, without sacrificing cost, right? So we followed a very traditional route, and we are, as I said, very, very excited about the pioneering of what Tesla and Piedmont are doing, because it pushes the industry forward. Typical Tesla, is the Silicon Valley speed kind of forcing an industry like mining, chemicals, which are typically slow, to kind of move on that speed. And I'm sure Europeans were shaken into sort of, accelerating their timetables, and even I would assume some other players most likely will be accelerating their America's plans, because Tesla kind of showed the way, paved the way.
See it today in the last 24 hours with Volkswagen pumping another 600 million into Northvolt, right? It's a great example of that happening, that push that Tesla's providing.
Exactly. And the Autotech route, exactly. So the Autotech route that the Finnish had been trying and playing with for a while, Tesla was like, okay, I'm going to do it. I'm going to follow that route, and I'm just going to do it. So it's interesting because them, in their own Silicon Valley way, in their speed and in their sort of classic Silicon Valley, let me just go figure out along the way, they are actually doing this industry a tremendous, tremendous, tremendous favor by just charging ahead, right? As always,
I think Anna may have just made news there in terms of Tesla's process.
No, Benchmark, I think. Benchmark did, right? It was Benchmark.
Oh, did they? Okay.
I'm taking all my news from Benchmark. They seem to have some sort of insider track. It's in the article they distributed today. So all I know is it's Benchmark's thing there. Okay.
Andrew, how much time do we have?
I think we've got time for maybe 1 or 2 closing questions or thoughts, Howard.
Okay. So I was going to ask Eric, I've avoided the word clay intentionally, but Eric, as a former analyst, you covered Lithium Americas. I know you're a shareholder in Lithium Americas. One thing that stood out, I had written this note, speculating which lithium company might Tesla buy, when Battery Day, I wrote that in May, when Battery Day was supposed to be in May, right? And he had 6 months to kind of, prepare for it. And we all kind of like left Battery Day wondering, what was he talking about? And why was he, not, if he likes clay, why is he not in Lithium Americas? So if you could talk a little bit about that. I noted he mentioned something about an acid-free process, just water and salt. And again, having worked with Western Lithium and Lithium Americas, they started with the roasting process, and now they're doing the acid process, but so what is this water process? In general, what's your takeaways of that vis-a-vis clay, what it means, why did he do it? Does it, somehow pour cold water or thwart investment, broadly, in the lithium sector. Share your thoughts, and then others can chime in as well.
I think Joe Lowry put it best and nice and delicately as bullshit. That there's a lot of debate as to whether or not Musk is telling the plain truth, in the sense that they really do have a project to look at lithium clay or sedimentary hosted. I prefer sedimentary hosted lithium mineralization in Nevada. Okay, they may have picked up a 10,000 acre project. They may be doing some preliminary work, but it will take years to finalize that process. Number one. Number two, to drill it off. Number three, to get it permitted. And four, to build it and ramp it up. So I don't think that, I think that's a sideshow. And as you said earlier, or in your writing, that this is a negotiating ploy, perhaps, in order to put a fire under the feet, or to the feet of some of the potential counterparties in providing lithium units. I think that's the more likely thing. I think that as you alluded to it, yes, I have Lithium Americas in my PA. I do believe in the successful conclusion of the construction of Cabral-Gardner in Argentina. And I also believe that Thacker Pass will come to be over time. And so that the market will, I've called it, or I used to call it in my analyst days, Thacker Pass was the gift with purchase as Cabral-Gardner gets developed. You gonna get that, Keith? The reality is that these things, as Anna said, we're going to need all of these lithium units in the process going forward. When analysts are sharpening their pencils right now, they're finding a 1 million, 1.1, even 1.2 million ton LCE shortfall by 2030, and whether that's a $20 billion number or a $40 billion investment remains to be seen. But the sedimentary hosted, I think, is one of the future sources that we need to look to, that the code will be cracked, not necessarily in the way that Tesla might bring it forward, but other sources like direct lithium extraction, and looking at what Standard Lithium is doing in Arkansas, looking what E3 is doing in Alberta. These are all important potential sources for the future.
I agree, and hopefully Minds and Money, we can do another panel sometime in the future. We're a fan of the all of the above strategy. I believe those are more likely to meet the post-2025 demand. The near-term urgency and shortage is going to have to be met with hard rock, and that's why I recommended and suggested we do this panel with Andy with just hard rock, providers, because we need hard rock is it's scalable. It's the most scalable. It's proven. The Australians have proven that it's the most scalable. The hydroxide conversion, some difficulty obviously with Tangxi and Kwinana. Hopefully Albemarle can do it, but we need a lot more hydroxide conversion, and we need a lot of it outside of China. So there's the security, there's the supply chain resiliency, and another very important point to your maybe I'll make a last point, Anna, on you were a pioneer on this green and ESG, but you saw Volkswagen, you saw BMW basically saying hard rock to hydroxide is secure, it's sustainable, but they're getting it all from China, through Ganfeng. The fact that SocGen, a French bank, is putting in an ESG whatever green stamp on your loan, demonstrates that mining, just regular mining, is sustainable. And if I can, every time I have a platform like this to speak, I just talk about the valuation disconnect. I mean, between mining, very low valuations versus tech and a whole bunch of other industries. Elon Musk talks about manufacturing being greatly undervalued, mining and chemical processes even more undervalued. And we're seeing, you could see that the interest in Piedmont stock, the interest in Lithium Americas stock. You know, there's appetite here to make money in this space. So I very much believe that, I've called it, you know, Lithium 3.0 has been, you know, kind of underway over the summer, and Battery Day really put an exclamation point, you know, on top of it. So what you're hearing here, nickel and lithium, this is the fundamental underpinnings for the clean energy revolution, right? And everybody listening here, and, you know, if this is recorded and put on YouTube, should, you know, the Tesla community should understand you can't have that future, the, you know, the mission of Elon Musk's sustainable future, impossible without funding projects like all of these panelists here. And from a very low valuation, you saw what happened with Piedmont, just a sleeper out of nowhere, the tortoise, you know, that took off like a rocket. There's potential, I think, with all of these companies and others to experience, you know, similar outcomes. So very much think that everyone, you know, listening here should, you know, consider investing in this exciting space.
Okay. Well, I think that with that, I think that's been an absolutely fantastic session. So I'd just like to go and thank once again Howard of RK Equity. Also, I'd like to go and thank this week's 4 guests, and also like to go and thank you, the audience, as well. It's been an absolutely fantastic session. I hope you all have a good rest of the day, and see you for our next 5 at 5 session next week. Thank you very much.